I'm excited today to introduce you to Alese Johnson. She is an experienced entrepreneur, real estate investor, specializing in self-storage and some other things as well. She'll be able to tell you a little more about what she's working on. We're very excited to talk about her business, the numbers, what it's like investing in self-storage, and what you could do with not a whole lot of experience or money to still see the benefits as far in taxes and in cash flow for investing in self-storage. So Alese, please introduce yourself in 60 seconds or less, if that's possible, and we'll go into things.
Mark, nice to meet you, Mark. Sure, I think I can do that in 60 seconds. My name is Alese Johnston. I have spent the majority of my career doing bank consulting and major acquisition conversions with really big banks across the U.S. And I got into real estate investing as a good place to park some of that money that I made consulting. And it turns out my favorite investment was in self-storage. And I decided to do a lot more of that. So that's how I got here.
So self-storage to me is the thing I like about it is about how unsexy it is, because
right?
Yeah, because you put on HGTV, everybody's renovating and fixing, and you get all these, these folks are watching HGTV and they decide to flip and they inflate the market, and everybody knows about single family, multifamily, and obviously you can make money in there, but it seems to me that there's some advantages to self-storage in terms of seasonality and saturation that and issues that are in other areas you don't have to deal with. But do my assumptions make sense here when I'm saying all this?
Yeah, it is profoundly an unsexy business. I mean, people come use our services to store all the stuff they don't want in their house. I mean, how not sexy can that be? But the thing is they can't let go of that stuff. And so they will come rent a storage unit forever. We had customers that we acquired when we bought our first facility that were still with us when we sold that facility last year. And that was well over a decade.
And so, you hear a lot of people sometimes obsessing over the fluctuations in housing markets and pricing. And is there going to be a drop? Is there going to be a spike? Or is there going to be a housing, is everything going to be a major correction? Do you worry about those same things and see as much fluctuations and economic, impacts from the economy on self-storage?
Not as much, but we're not immune to it either. I mean, we've seen some crazy cap rates in the last year or so post-COVID in the storage industry. Facilities that in tertiary markets that used to would go for an 8 or 9 cap were trading at 5 caps there for a while. So that strikes me as a little nuts. But that's starting to calm down now. I've seen a number of deals come across my desk in the 8 cap range in the last week. So that seems a little more reasonable to me.
Great. Now, so let's break down the numbers here. So let's say, and obviously you can't promise any numbers, but let's just talk about, so you always got to say that, and so we obviously nothing is promised, but on let's say a typical deal that's successful and within reason here, you put in, if you put in $100,000 at an 8 cap, would you be getting, would that be equivalent to saying that, your distributions would be similar to 8,000, or are you, because you're leveraging, is your cash on cash a little higher as a limited investor?
Well, gosh, you're asking me. I got to tell you, I can't do math in my head. Your audience is going to love that. They're probably all accountants who could just rattle those numbers off, and that's not me. I can tell you that you can expect what felt like pretty decent returns to me Although in my experience, I personally was playing for the long game and really just wanted the equity out at the end. So I was never trying to take money out every month. I specifically didn't want to.
Gotcha. And
for
so,
my own tax strategies.
Yeah, and then so for as far as the on the exits is where you're typically seeing a a lot of the value. Do you guys refinance, or now with interest rates, is that less of an appealing?
Yeah, we played that game every time we had the chance over the decade that we owned storage facilities. And yeah, you just refinance to get the interest rates down, because certainly you don't want to pay too much money for your storage facility or for the money that you're using. And yeah, I would not refinance in this market though, unless the interest rates go down. But I think a lot of people are being forced into, they had 5-year refinance requirements. And so they're having to go to the market and work out new terms. And I think that's really hard on some people where their numbers worked nicely, cash flowed at, 3% money. But now that they've got to get 7 or 8% money, depending on how well your banker loves you and where your market is, it's sometimes a lot harder to make the cash flow work every month. So, if you're playing for monthly cash flow numbers, that gets hard.
Yeah. So, and what I've seen is a lot of people saw a lot of success when they started investing in maybe 5 or 6 years ago, and a big portion of their success just came from the inflation and the rising prices of the property. So maybe they bought a rental property or multifamily where it wasn't cash flow positive and it was a headache, but when they sold, they had an exit of a 6 figures in capital gain.
Yeah.
So you have a lot.
So where are they putting those cap gains now?
Yeah. So you have a lot of people who maybe weren't so successful as landlords, but it seems to me, and correct me if I'm wrong, I'm wondering your opinion here. A lot of them have a lot of cash. They didn't really run a very cash flow positive business, but because of the capital gains, they have this almost this inflated sense of confidence. And what's going to happen when you can't rely on, for some of these folks in maybe the residential areas where it was like you could buy anything in 2008 and you'll look smart 10 years later,
right? Yeah, except those of us who actually owned property going into 2008 didn't like that so well. But those people need to check their egos at the door on that, because timing, can make a lot of us look smart when really strategically we weren't.
So some of the exits I see on syndications, we typically see like a good syndication will have like a 5 or 6 year exit. And at that time, anywhere from 50 to 100% capital gain. What would we expect on a successful exit for self-storage?
Well, that requires a crystal ball, Mark, and I can't predict the market 5 years out. I can tell you that I 3x'd my own properties.
Wow.
On the ones that I sold in January. But that was proper market timing and just sheer luck. But if I got back into the market right now with it being so high and then was planning on selling for 5 years, I don't know that those huge multiples will still be available. It's just, we're back to that cracked crystal ball.
Yeah.
So if you're buying at the top of market, it's like buying at the top of the stock market. You got to figure out what your strategy is.
Yeah. Okay. And so some of the things about that now, if you're not a CPA, you may not be able to answer this question here, but what I'm
Uh-huh.
wondering is, so I'm assuming you do cost segregation studies on all of the self-storage, and
Absolutely.
so if you're a limited investor, what percentage of your investment do you get would you say people may get as a deduction in year one from the cost seg? So let's say you're 100, you put $100,000 in. What do you think the tax deduction from the cost seg in year one might be for someone like that?
There you go with another math question, Mark.
Yeah, if you can, it's fine.
I can't give you a number, but I can tell you that from my own experience doing cost segregations is dramatic, especially that first year tax deduction was huge for us because so much of a storage facility is in equipment and things that you can classify and deduct out that first year. So you've got to do a cost seg study when you acquire a storage facility.
Mm-hmm.
Absolutely.
And do you see maybe and again, this is a question where unless you're in finance, this might be tricky to answer. So it's all right if you can, but
you're hitting me with the hard ones, Mark.
This is the last numbers question. Don't worry.
Oh, good. Thank you.
Would you say maybe 20% of purchase price to 40% qualifies for bonus, or what is there a range that you typically see?
I think your numbers are pretty reasonable.
20 or 40%. Okay, great.
Yeah.
The cool thing that I like about these self-storage facilities is, we just had a conversation with some of our other clients on oil and gas.
Yep, I saw that.
Yeah, awesome stuff. And you get passive income. Your first year, you have a loss that'll offset your W-2. So let's say, let's say you don't have rep status and you can't, you're in the position where you can't manage a short-term rental. Landlording is not your thing, but you still love real estate. You can reduce your taxes with some of these investments in oil and gas. And then eventually, though, that oil and gas is going to start generating some profit that could potentially be taxable. You could take some of your tax savings and combine it with a strategy like this, where you're still doing nothing at all, and you're going to get that year one loss from the cost segregation to offset the passive income generated from your oil and gas. So now you have cash flow that is going to be untaxed, which is a beautiful thing. And yeah, compare that to your W-2. I mean, some people, they're always looking for ways to reduce the taxes from their W-2, but there's also something beautiful about having cash flow that is untaxed. So, yeah. So one of the things I really found interesting about what you do is with Storage Trader. It looks like such a simplistic way to, as a consumer, to go on the website, evaluate deals, and it looks like you can invest as little as $10,000 to start being an LP in some of these storage facilities. What led you to create that vehicle?
Because every cocktail party I went to, people would tell me, once they heard that I did storage investing, they were going, "Oh, how can I get involved in that? I don't want to buy a whole facility. I don't want to have to learn what it takes to run one, but I sure would like to invest in one." And, we would just commiserate about that being a problem. And so I finally decided, well, that's a fixable issue. We can create a marketplace where all my friends and people like them can come find facilities that they want to invest in and then satisfy that desire to own a piece of a storage facility without having to develop the chops to manage one effectively, or to do the whole big, multi-million-dollar investment to purchase the entire facility.
Yeah, because when I see with other syndicators, they usually require a minimum of 25 to 50,000. And then there's all these regulations where you have to have a developed relationship with them, with evaluating the PPMs, and there's all this paperwork, and it's really tricky for people to get started. But with this type of vehicle, you can be, relatively quickly you can go in. Maybe you don't want to spend 25 up front. You could put 10, as little as 10,000 up front, and you're still going to see a lot of the benefits here. The tax benefits in year one might be helpful. You'll see potentially some cash flow and some, at least what we're hearing here, potential significant capital gains as tax advantaged as well.
Yeah, that sounds about right. I want to be clear that each one of our deal sponsors sets their own terms. So on one storage facility in our platform, you might see a minimum of 10. On another, you might see a minimum of 50 or 100. It just depends on the specific opportunity. But yeah, you're right that syndications can get a little complicated. Now we're not a crowdfunding platform. We do require that the people who come invest with us are accredited investors, and they have to submit the paperwork to prove that. Mm-hmm. And they also have to go through FINRA verification to prove that they're, not on the PEP and sanctions list. So we need to know on all sides that we're dealing with, legitimate investors here in the U.S. But we make that super simple and as close to painless as we know how to make it, and still satisfy regulatory requirements.
Yeah. Yeah, and that's another thing here. So when you're forming a partnership where there's limited investors who aren't making decisions, mm-hmm. a lot of people don't realize this, that you're issuing securities, and there's mm-hmm. heavily regulated. And we have a lot of our clients who would go and form handshake deals and not even mm-hmm. have anything written up.
Oof.
Limited partners. And now mm-hmm. we're like, you're putting yourself at risk here for all sorts of challenges, and you're out of, the partnership is out of compliance. Yeah. Not only that, there's not even any sort of partnership agreement or anything in some of these folks getting started. So if you're this is a really good example of a tight process for raising capital. And if you're at a beginner stages, you really want to think about, if you're going to partner with anyone, mm-hmm. and in particular with someone who's not a family member, and they are going to be a limited partner, you really want to make sure you're doing this in a compliant manner.
Absolutely, you do. And we require deal sponsors to submit all the paperwork that they normally would in a deal room for their bank or a private investor. And my partner and I review all that documentation. We want to be sure that we fully understand the deals that are being offered on our platform. So we do pretty tight due diligence. Now, certainly don't take our word for it. We insist that the people who invest on our platform do their own due diligence, and they have to sign off that they've, done all the appropriate research and review themselves. But they do have the confidence that we've looked at it pretty closely before we put it on the platform.
Yeah. So one thing that I think is that people overlook with this as well, going back to some of the tax stuff here, is that mm-hmm. when you do that year one cost segregation study, this is a great way as a capital gain strategy from other real estate. So if you have a mm-hmm. failed 1031 exchange, and now you have all this cash from the sale, you're like, what can I do if I want to continue to invest and offset this capital gains? Invest in real estate mm-hmm. that's doing a cost seg. The losses can offset your capital gains, even if you don't have real estate professional tax status.
Yeah. Yep.
And, another thing I saw about your background is you're helping people out with due diligence on deals, and you have your company that does that. Can you tell me a little more about the due diligence process and how you're helping people out?
Are you talking about specifically with Storage Trader, or are you talking about something else you saw on my resume?
I believe I saw with Isaac.
Yes. Yeah. So that is a company that I developed about 8 years ago to do due diligence in the mergers and acquisitions space, because I used to implement mergers for really big banks. And we saw that there's a tremendous failure rate because the average person who's trying to acquire another company statistically will not put adequate amount of time into digging into the company. Sometimes they don't even know the questions to ask. So we built this framework for doing due diligence that allows you to score the acquisition target and really understand their organizational maturity, nuances around a broad range, I think some 180 different aspects of a company's operations before you do the deal. The thought was we could head off that 80% failure rate, or it might be 70, but regardless, it's too much. People throw their money away buying companies that they don't fully understand. So 3 years out, they go under, and everybody's not happy about having done it in the first place. And we offered our strong opinion that if you better understood the company up front, then you could adjust your prices appropriately and you could do a better job of running the company long term. And if you already own a company, you're trying to do a true merger, then you better understand what that integration process looks like, because it always costs more money and takes much longer than you anticipate going in. So that's what Isaac / Merger Match was all about, was trying to improve that process.
Do you have a similar process when you're evaluating self-storage deals?
No, we've boiled that down to something much more simple.
Nice. What are some of
the storage is a very simple business. And that's what is so not sexy about it. There just are not a lot of moving parts. And so it doesn't require such an intense due diligence to take a look at a storage facility. You want to see occupancy, you want to see what the rent rates are, you want to see how that compares to the market, you want to understand market saturation, and then you run some numbers. And for my personal work, I have it boiled down to a spreadsheet that we can plug in a few numbers and provide a price to you in a matter of 15 minutes or less. So it's just not that complicated.
So that's probably something that is appealing to limited investors, in that when you're investing in the stock market, and you're never going to know all the company's operations, but when you're investing in self-storage units, you're able to review the prospectus and make sense of the information relatively quickly in a much more simplistic type of investment vehicle here.
Yes. I mean, there's just not a lot to operations in a storage facility. You rent units, you move people out of units, you rent the unit over again. You sweep them out, you clean them up, you maintain the buildings, and you collect money. I know I'm leaving something out, but it's just not, it's not complicated as a business model.
Do you see a decent amount of renovations in any of these self-storage facilities?
I do.
What kind of renovations?
Especially out in the tertiary markets. You're seeing buildings that were built 20 or 30 years ago, and they're to the point where the doors need to be upgraded and redone. The springs are not working the way they should. They've gotten a little dangerous, or the paint has faded due to sitting out in the sun. They just don't look as pretty as they once did, and street appeal is an important thing. You see a lot of concrete buildings, which people used to like, but have fallen out of favor. So you see people redoing those, putting metal cladding on the outside of it to make it look more current. Mostly I see people adding a lot of cameras and lighting and technology Bluetooth door locks. That's my favorite new tech personally, because it increases operational efficiency so dramatically. I see there's still a lot of old facilities out there where there's a house on the property where the office manager lived. And that's just not done anymore. So people buy those facilities and then either tear down the house or convert it to some other kind of income generating business. But people don't have on-site live-in storage managers anymore. We have websites and tech that do that work for us.
So what are the some of the most exciting things that you find in what you're doing with self-storage right now, or just in general with your investing career?
Well, the most exciting thing I see in storage right now is all the technology that's coming on board that allows us to rent storage units 24 hours a day. You can, be sitting in your bedroom at 3:00 in the morning and decide you need storage and rent it right there, sign all the contracts. I love e-signatures. There's a software we looked at last year that did government level identity verification. Like it forced you to scan your driver's license and then do a selfie, and it matched it up and it ran you through all the security databases. I like that a lot because that cuts down on some of the fraud that we see in the industry. That kind of thing I get real excited about.
So it's like you find these older storage facilities ran by some people who maybe have not taken the initiative to keep up with the new technological advantages. You give it a facelift, you give it you create automations, reduce the amount of man hours needed to oversee the place, and then you can increase prices, drive efficiencies and profits. And if you've done this a lot of times, you likely have a reliable model and you know how many people will stay and what you can charge. And pretty soon you're pretty confident that you can drive up the value of this place and have a healthy exit, sounds like.
That's spot on, Mark. So yes, we are very confident we know how to do that. Yeah. And amazingly enough, very few people will leave. Remember, they don't know what to do with their stuff. So they will put up with a lot. Now, I say that, and I saw somebody acquire a facility recently and they jacked up rates. So like they raised rates, I want to say 30%. And they were already pretty high. So they had some move outs. I've been watching that case study for a bit. But I think, I suspect that case was more about their failure to communicate effectively with their newly acquired customers. So I don't know, but in my personal experience, I have only had maybe one customer leave because of tech changes or rate increases over the years. They'll bitch about it. They'll call you up and talk to your office manager and complain, but they don't actually move out.
Okay, good to know. Yeah, well, we get the same complaints when we have to raise prices too. So
well, everybody does, right? Nobody likes price increases.
Yeah. I guess as a business owner, it's just part of the business. You gotta.
It is. You just have to do it, though.
Yeah. And so with the technology now, and that's probably one of your biggest initiatives. By any chance, are you also taking advantage of artificial intelligence in your business?
I am looking for ways to do that. I can't say I've implemented anything yet. Well, except for in our marketing. We use AI to write content for us, to write articles, and that's helpful. And we recently tested out an AI platform that would generate PowerPoint video for us. So we could create, we could take a blog post and create YouTube to match it really quick, like a couple of minutes. And that was a pretty amazing thing. But in the actual day-to-day operations, I haven't actually implemented anything. I know there's a product out on the market called Swivel that is a chatbot for self-storage websites. And it's AI powered. And I think that's really interesting. I'm looking forward to trying that out at some point.
Very cool. So what I just did right now is because I was at a conference, a tax conference, and they said, you know, some of our limitations is we just don't know when and how to use it. So one idea is you ask the AI how you can use AI.
That's brilliant. I like it.
Because it's a really good, you know, idea maker. So here I just plugged it in. Here's some of the things that they're saying. Chatbots, personalized recommendations, inventory management, dynamic pricing, management, maintenance predictions, facial recognition we talked about, anomaly detection, trend analysis, cross segmentation. Not segregation, but segmentation, identifying different customer segments and tailor marketing strategies. Target marketing campaigns, customer retention models, smart contracts, environmental efficiencies, integration with other services, virtual tours, mobile apps, and automated compliance checks. That's kind of interesting. What do you think about that?
It is interesting. It is really interesting. The virtual tours, I kind of like that. I'm glad you're recording this, so I'll have that list later. I can go play with it and see what I can use.
Yeah, I just asked ChatGPT, but I'll email you the results. I mean, I have so much fun with this thing too.
Yeah, I have a GPT account. I love it, and I've been using their companion artist that goes along with ChatGPT to generate some images for presentations lately. That's an entertaining thing to work with.
Yes, so much cool stuff. And well, ChatGPT, there's a lag of 2 years on whether it's gathering information. So if we want to do tax research, what we're exploring is you paste the legislation into ChatGPT, and then you have it read the legislation and answer your questions about the legislation based on the terminology.
Oh, well, that's interesting. So you can use it to expedite your own analysis of an article.
Same with Excel docs. There's a way that it'll read Excel to give you evaluations, come up with ratios, and all sorts of fun stuff.
That's fun. I might have to go play with that. Thanks, Mark.
Yeah, anytime.
Well, you know, you were asking about trends. This is profoundly not sexy, but I've been looking into how climate control is changing. And I think we're going to, well, I know for sure that as people develop storage facilities, you're going to see a heavier concentration of climate control units. But with the weather being so hot and so undependable, people need to put their stuff in a climate controlled unit. And from a profit margin perspective, as long as you can control your utility costs, a climate control unit can bring in a lot more revenue.
Wow. Okay. And I imagine you have to do moisture control and all those as well.
In order to be climate controlled, it has to be both humidity and temperature. Otherwise, you can't use the term. You get into legal trouble.
Gotcha. Cool. So some other things. So what I'm wondering now is, what do you do outside of self-storage? What do you do for fun outside of your work?
For fun? Well, I do angel investing. I'm a member of the Arkansas Angel Alliance. And that's fun because we get to hear pitches from a lot of interesting startup companies. And I'm endlessly curious about businesses that are starting up here in Arkansas. That fascinates me. And I also have been learning to do ballroom dancing. So that's cool. A lot of fun and challenging. I've learned that my feet don't move fast enough, but we're working on that.
All right. And if you could go back to your former self, let's say 20 years ago, what would you tell yourself to best have helped you succeed in your business endeavors?
I would have told myself not to be scared to go out and leverage up heavily and buy every last storage facility I could get my hands on. I was way too cautious about that.
What would you tell yourself from 1 year ago?
From 1 year ago? Oh, gosh. I would have told myself to go ahead and cash out when we were seeing 3 and 4 caps, because I missed that curve by about 6 months.
But it's like you never know. Like when the
you don't know.
In 2008, everybody's like, "Oh, I should have bought in 2008." No one knew when it was going to stop. Prices were going to stop plummeting.
Right? Yeah. It's that cracked crystal ball. You just never know. So I still came out pretty good. I'm not sure I really wanted to sell, but life. I got divorced and had to liquidate everything. So otherwise, I would never have sold my storage facilities, top of market or not. But that's just me personally. That your average person, I don't know. I don't have any advice for a year ago that's generally applicable.
Yeah, no problem. Well, thank you so much. Can you tell the audience and listeners where they can learn more about what you do and where they can go to potentially invest in self-storage through, I believe it was called Storage Trader? Absolutely. Come follow us on storagetrader.com. We have a blog section that has a lot of articles. 1 or 2 of them are written by AI. Nice. That will give you a lot of information that you need to know before you invest in a storage facility. So that's a really great resource. Or message us. There's a contact form on the website, or you can reach out to me at Alese, ALESE, at storagetrader.com. And I'm happy to answer questions. Keeping in mind that I'm not a broker or attorney and can't give investment advice. And we all know I'm not good at numbers. So, but we're happy to have a conversation and be helpful to people who are wanting to look at either investing in storage, or they have a project they're wanting to do that they need some capital raising assistance. Wonderful. So, Alese, love to talk to you. Awesome. Thank you so much for your time, Alese. You're very welcome, Mark. It was a delight. Absolutely. And for all the listeners, we'll put all this information in the show notes. And if you're interested in either joining our team, or you or someone you know might be interested in being a client, email info@markperlbergcpa.com. Subscribe for more.